Gamestop short squeeze explained. If you've been following the stock market in the last couple of days, you've probably heard about the GameStop price surge and the term short squeeze. In this video, I'll be explaining what the term short squeeze means and how it's affected GameStop price value. If you haven't already done so, make sure to subscribe to my channel and like this video for more news on the stock market in the future. So, what is a short squeeze? To understand this, we first need to know what the term short means in stock trading. A stock's value is determined by supply and demand, which is basically when an investor is selling or buying. Now, buying a stock is relatively simple. You pay for the price of the share at that current market rate. In return of the money, you receive the shares. However, selling is a bit more complicated than that, because surely to sell something, you must first own it. How does shorting work in the stock market? So when an investor decides to sell a stock, they first need to borrow this stock from a broker and sell it at the current market rate, hoping that somewhere in the future the stock's value will drop, where they can rebuy that position, which is the key phrase here. Okay, we're gonna need this phrase later on in the video. When they're gonna rebuy this position, the share, and return it back to the broker, making the profit in between. Suppose there's a stock out there worth $100. I'm an investor, I come along and I believe that it's gonna go down in value over time. I would borrow this share from a broker, sell it at the current market rate, which is $100, hope that it goes down in value. Once it does, I will need to rebuy that position and return it back to a broker, making the difference. So if it went down in $20 down to $80, I would make $20 profit. So that is what a short position is. Now, how does a short squeeze work? A short squeeze happens when the majority of the market decides that they want to hold their positions and not sell their shares. Shorters will lose a lot of money because the price value will keep climbing up until a point called the margin call. Now, the margin call is when the broker says to the investor, the price of the share is going really high, so we want our shares back, and you don't have enough equity in your account to cover these losses. So they will automatically close the shorter's position, leaving the shorter in a position, technically converting the shorters into buyers, because now the shorters must buy stock to replace what they've borrowed from the brokers in terms of shares, which increases the amount of buyers in the market, because everyone else the majority is buying and holding, and now the shorter is converted into a buyer because of the margin call. When this happens, the price of the share surges even higher because the demand for the stock increases and the supply has stayed the same or has even decreased because more people are holding because of the price increase. In very basic forms, this is what a short squeeze is. It can cause shorters to lose huge amounts of money. But is this what happened with GameStop shares? Yes, indeed, this is exactly what has happened. It is said that there is a battle going on with retail investors naming themselves Robinhood, who are mostly general public, versus a few hedge funds, and specifically one named Melvin Capital. Melvin Capital has been shorting GameStop shares with huge capital, causing manipulation in the market. That's what's been said. The retail investors who are believed to starting the revolution of Robinhood trading are insisting of buying these shares and holding onto them, pushing the price from about $40 to above $200. It is estimated that for every $12 increase in price of the GameStop stocks, Melvin Capital loses around $1 billion. The price of GameStop shares even went higher after Elon Musk tweeted GameStonk. It caused a further 22% increase pre-market, sitting at $230. Warning guys, these short squeezes are actually temporary and may not resemble the real prices of the stocks. My advice is that it is best to stay away from these short squeeze stocks, as sooner or later there will be a correction in the market. Thanks for watching this video. Make sure to subscribe to my channel to stay informed about the stock market in the future. Have a good day.